Good morning and welcome to Matters Financial and Geopolitical from the Frontier. Thank you for stopping by. Let me start with some macro thoughts. Now, here is a market I can believe in, says Peter L. Brandt. He's talking about the Dow Jones, which has proven extremely resilient in this market downdraft. From The Economist, the Americans don't want a deal, says one fund manager. They want to screw us. Chinese officials and investors have swung from a state of denial about the trade war to deep pessimism. The Americans don't want a deal, says one fund manager. They want to screw us. I wrote about this separately a bit this weekend. I was saying President Trump seems to be relishing his financial warfare strategies. He has Khamenei on the run. Maduro in Venezuela has been attacked by remote-controlled drone. Z suddenly looks ever so fragile. And I did a podcast a few days ago about this, and I called it Matters. Is Xi Jinping's bold China grab starting to backfire? And this is the other point I was making, which is relevant to Erdogan. You know, when you put yourself on the pedestal, you own the country, as it were. And therefore, if it goes wrong, you know, the cause and effect is very easy for anyone to see. Home Thoughts, I came across this wonderful song by Ossie Bisa. I'm far too old now, you've probably never heard of it. It's called Sunshine Day. And I like this photograph by David Yarrow, The Untouchables. He likes taking photographs of elephants in the Amboseli, which is one of the best places to see them. Political reflections. I ban holding any talks with America. America never remains loyal to its promises in talks, just gives empty words and never retreats from its goals for talks. Khamenei. And again, returning to what I was saying over the weekend about Trump relishing his financial warfare strategies, and he has Khamenei on the run. This is the FX-related warfare that the US has currently deployed. And to wit, you know, that strongman conundrum. I'm saying President Erdogan, like Xi Jinping, finds himself caught in the strongman conundrum. If you are the strongman and you've placed yourself on a pedestal, then you own the problem. Let's move on to the currency markets because there's been plenty going on there. Euro dollar trying to push a little bit higher, 114.20. It was at 114, the figure, and dipped yesterday below. Dollar index 96.29, Japanese yen 110.91. Swiss franc 0.9939, the British pound 127.78, the Australian dollar is at 0.7275, Indian rupee 69.775, traded above 70, record low. South Korean won 1130.25, Brazilian real, that softened 3.8830, Egyptian pound holding in there, and I expect it to do so, 17.9125, and the rand, which popped way above 15 yesterday, that flash crash, is last at 14.3235. These were levels we saw around the resignations of finance ministers during the Jacob Zuma regime. Dollar index, my target is now 100. We're at 96.29 here. Euro dollar, I think we're going below 110 at some point. Elon Musk has accidentally given Saudi Arabia the power to wreck Tesla. Saudi Arabia now has the ability, if it wants, to hammer Tesla's credibility in stock with little more than a few well-timed leaks indicating a lack of interest, no question. Bitcoin dropped below 6,000 and dozens of smaller digital tokens tumbled as this month's sell-off in cryptocurrencies showed few signs of letting up. Let me just check where that is last. Yeah, below 6,000, 5,950. The largest digital currency fell as much as 6.2% to 5,887. lowest level since June, according to Bloomberg composite pricing. Ether sank 12%, while all but one of the 100 biggest cryptocurrencies tracked by CoinMarketCap.com recorded declines over the past 24 hours. Bitcoin has now dropped about 23% in August, extending its retreat this year to 58%. The total market capitalization of cryptocurrencies dropped to $190 billion from a peak of $835 billion in January. As you know, I was bullish about it in 2017 when we had that incredible increase. I sort of said take the position off, which admittedly we got in around 1,000 at 10,000, and then went up all the way to 19,400. And I was quoting Hunter S. Thompson, wow, what a ride. Interesting article in the Wall Street Journal, the mystery behind Tether, the crypto world's digital dollar. Its Tether has been fingered by Nouriel Roubini on several occasions for artificially inflating the Bitcoin price. And then, of course, we had, I think it was the University of Texas report on the same. Fast-growing digital currency that claims to be backed by US dollars has become a cornerstone of the volatile cryptocurrency market. The problem, there isn't hard evidence that cash supporting it exists. Tether, whose main selling point is its tie to the US dollar, has grown dramatically over the past year. Its daily trading volume of around $3 billion trails only Bitcoin's $5 billion. Tether has also become a crypto bank for cryptocurrency businesses that have trouble maintaining real-world banking relationships, providing liquidity and a place to park assets, according to a new study from blockchain research firm Chainalysis. Tether has assumed this role because of its link to the dollar. Unlike other cryptocurrencies that fluctuate wildly in value, one Tether generally equals $1. This makes it a sort of digital dollar substitute. That is also why it's important that Tether has dollar reserves backing each of its approximately $2.5 billion worth of coins in circulation, but Tether has never produced any audit showing it has the purported reserves. The company that controls Tether maintains it has the reserves, yet it has never named the banks it uses to hold these funds, nor said where they are based and regulated. There's nothing to hide here, said Mr. Rial. It's not three managers just cranking out money randomly in a dark basement somewhere. I think it is, actually. Unlike other cryptocurrencies, there isn't a set amount of Tether in circulation. In theory, demand drives new issuance. It's sort of the central bank of crypto trading, yet they don't conduct themselves the way you'd expect a responsible, sensible financial institution to do. Tether marketed its cryptocurrencies as a way to mediate the sector's volatility, offering the safety of the dollar along with the speed and anonymity of a digital currency, a crucial link in the wider cryptocurrency market. The Securities and Exchange Commission recently singled out Tether in its rejection of a proposed Bitcoin-based ETF, citing studies that raise the possibility that the digital currency is being used to manipulate the Bitcoin market. Tether's Mr. Rial contested such claims. It's not anything about Tether that enables this volatility, he said. Interesting. Let's move on to the commodity markets, where Peter Brandt has been relentlessly bearish about gold, and he's been proven right. He says gold completes a running wedge to confirm market is probably in full-fledged liquidation mode as commercials may be forced to capitulate, he says. Gold last trading 1195.75, below that important 1200 mark. Crude oil lost at $66.88. It's holding in there for now. Emerging markets, this is the EM currency year-to-date spot performance. Have a look at that. It's a horror show. 5th of February this year, I said, interestingly, JP Morgan's MB spread is down to 258 basis points, the tightest since mid-2014. How long this lasts is anybody's guess. I was predicting it wasn't going to last very long. The emerging market foreign exchange basket just witnessed its largest 4-day drawdown since Lehman. That's minus 5.3% standard deviation move over a 10-year period. Another piece I wrote in May, the end of halcyon days. I was saying then, like a great golden flood of liquidity, QE is believed to have inflated market valuations as far as emerging, frontier, sovereign, sub-Saharan Africa, and even cryptocurrency markets, which I will get to momentarily, which endured a bloodbath on Friday. And I said, interestingly, JP Morgan's MB spread is down to 258 basis points, the tightest spread since mid-2014. How long this lasts is anybody's guess. Emerging and frontier market borrowers surely need to get their skates on and pull the trigger real quick on any borrowing they've been considering for this year. Interesting piece in Yahoo about Donald Trump wielding a tariff and sanctions hammer, but calling it a risky strategy. Donald Trump isn't the first American president to rely on economic sanctions and tariffs to exert US power, but he's taking that approach to new heights against allies and adversaries from Turkey to North Korea. With an unexpected tweet on Friday morning, Trump announced that he was employing tariffs normally used to address trade disputes to pressure Turkey over its continued detention of American pasta held since 2016. I still don't know what he's being held for. And when I asked a Turkish fellow who was communicating with me over Twitter, he didn't answer the question. Already in a tailspin over President Recep Tayyip Erdogan's economic policies, tumbled further with Trump's decision to double steel and aluminium tariffs. The move against Turkey follows Trump's maximum pressure campaign on North Korea, fresh penalties against Russia, and his plan to reimpose a raft of sanctions against Iran and anyone who does business with it. They are explicitly using tariffs as a sanction. All these years we separated the two. Tariffs were for unfair trading practices and sanctions were for foreign policy problems. The president via tweet said, to heck with it, we're going to use tariffs for foreign policy problems. Pastor Brunson, apparently, according to a tweet I saw, was to be released from house arrest by August 15th, but that's being subsequently denied by all sides. Turkey's headed to a full-blown financial crisis. PIIE senior fellow Jacob Kierkegaard says he's not sure Ankara understands what's about to hit them. That's spot on. That was my piece over the weekend, Cold Turkey. Harold Macmillan, when asked what a prime minister feared most, replied, events, dear boy, events. Talking about Erdogan and the death spiral and the Turkish lira. Mrs. Thatcher in 1998, there is no way in which one can buck the market. The only person who bucked the market, let's be honest about this, is Mahathir. But that was specific. It was a smaller economy at the time. You could put up the ramparts, which is what Mahathir did. But I don't think it's doable again. Even if they got dollars, we got our people, our God. Call that a Hail Mary pass by Erdogan. So, you know, very difficult situation. Erdogan, a Shakespearean figure, for he has slayed enemies, real and not real. His chest has been puffed up with pride. He even rescued the Emir of Qatar. But he has now met his match, that match being the markets. I hope he still has Madame Lagarde's number on speed dial. And I said, such is the ultimate bonfire of populist vanity. The populist leaders with their cheerleading claques have drunk their own Kool-Aid, and therein lies our ultimate salvation. They will be driven over the edge. The edge, there is no honest way to explain it, because the only people who really know where it is are the ones who have gone over. And I was concluding by saying Erdogan is right at the edge. In the absence of any policy response, the sentiment is all against Turkey's lira right now, correct? Turkey's Erdogan's exchange rate will go back to rational levels within the economic reality, since recent US actions are a stab in the back against Turkey. If someone in Turkey had bought Bitcoin at the beginning of the year instead of holding their money in lira, they'd have lost even more. India rupee hit fresh lifetime low above 70. This is Holger, and this chart is from David Inglis. And Argentina's central bank unexpectedly hiked rates to 45%. You can see there is absolute turmoil. Halcyon days were those quiet days when nothing happens. Those are far behind us. Sub-Saharan Africa, Kabila's decision to step aside won't change the DRC's power dynamics. Nevertheless, the party's announcement means that for the first time in modern Congolese history, presidential power will be transferred through an election. Instead of Kabila, the People's Party for Reconciliation and Democracy has fronted former Interior Minister Emmanuel Ramazani Shadari as its presidential candidate. Many commentators have described Shadari as a loyal regime hardliner. There should be no illusions that his candidacy means that the DRC faces a brighter democratic future. He's very close to Kabila as he was to his father, and is unlikely to threaten the incumbent's grip on power. Kabila will most likely pull the strings in the background if Shadari's elected president in December. He is one of the founders of the People's Party for Reconciliation and Democracy. Shadari's administrative career began in 1997 when the former president Laurent Désiré Kabila appointed him as vice governor of the eastern Maniema province. A year later he became governor. Maniema is an important mining center in eastern Congo, even if it's not the most significant, as it contains diamonds, copper, gold and cobalt resources. Since 2012, Shadari has been president of the party's parliamentary group, wields a lot of power in Kinshasa. Until February this year, he was instrumental in organizing the violent repression of protesters in the capital, maintaining Kabila's control of the street. The US and EU have imposed sanctions on Shadari for his involvement in repressive activities. This means that even if he's elected president, he will not be allowed to enter America or Europe. Shadari's candidature means that Kabila may still retain a good deal of power. There's speculation that he could become prime minister under Shadari. The president can technically choose the prime minister under the Congolese constitution, although their choice has to be ratified by the National Assembly. If Shadari was elected and Kabila was chosen, then this cohabitation would increase Kabila's power as prime minister. Both men would be from the same party, so the president would find it difficult to exercise power without Kabila's support. That seems to be the strategy. It's almost certain that the hugely popular former governor of Katanga, Moise Katumbi, will not be able to run for the presidency. This is from the same article. This goes back to June 2016 when I said Kabila outwitted Moise Katumbi by removing him from the street in the Congo entirely, and saying that might well prove a cleverly administered technical knockout, as it has done, and that it was all about getting the street, because that's where the revolutionary contingent attains its ideal form, not in the place of production, but in the street. Can China free Africa from dependency on the mighty dollar, asks the Daily Maverick. This was last night's sunset at Keya River. No filter, Photoshop or anything. This is as it was. Helen Ziller. South African all shares down 2.72% this year. Just a reminder that the rand is the most traded emerging market currency in the world as a percentage of GDP. A madly high 19%, says Charlie Robertson. Dollar rand, we've recovered a little bit, 14.32.35. Nigerian all share down 7.44% year to date and in a bear market. Ghana Stock Exchange up 9.35% year to date. There are contradicting reports about how Mugerwa was shot dead, with officials claiming the chaos was sparked off after Wadri and Bobby Wine's supporters attacked the convoy of President Museveni. And this is the tweet from Bobby Wine. Police has shot my driver dead thinking they've shot at me. My hotel is now cordoned off by police and SFC. Joy Doreen Bira, who's Ugandan but based here in Nairobi, calls it the mafia country. Take care, brother, she says. Uganda's central bank maintained its key interest rate at a record low 9% as it seeks to balance rising inflation and the need to encourage economic growth. Moving to Kenya, this is the headline from the Business Daily. Uhuru advisor hits out at IMF's 150 billion shilling loan, the conditions around it. But you know, external conditions have deteriorated exponentially. I don't think it's worth getting into a head-to-head with the IMF. Doesn't make sense. Barclays reported first half earnings per share expanded 6.153%. Total assets 316.628 billion versus 268 billion last time. Customer deposits 216.8 billion versus 188.65 billion. Total interest income 14.13 billion versus 13.13 billion. Net interest income 10.966 billion versus 10.544 billion. Non-interest income 4.69 billion versus 4.39 billion. Total operating income 15.66 billion versus 14.98 billion. They increased the loan loss provision 26.85% to 1.716 billion. Operating expenses were up 6.04%, profit before tax up 2.59%, profit after tax up 6.194%, earnings per share up 6.153%, dividend unchanged at 20 cents a share. A sequential quarter-on-quarter slowing because EPS in the first quarter was up 9.375%, but I think they've just made bigger provisions. Overall, it's been a strong stock this year. I expect it to continue to perform, and I think overall the whole ABSA story is going to be a net gain for Barclays Kenya. Through its country manager Martin Bogo, Tullow Oil has expressed its satisfaction with the government's intervention to break the 45-day stalemate, which has caused losses of up to 400 million shillings. The contractor will resume full-time operations on the 23rd of August. Kenya shilling lasted 100.77, third best performing currency in the world this year. Nairobi all share up 1.35% year to date. NSE 20 down 10.63% year to date.